Todd Preston is here from D.A. Davidson with this week's market news. We're going to start off by talking about yesterday. Sounds like the market was mixed.
It was, yeah. We saw the NASDAQ rallied, but the S&P and the Dow both sold off. Dow was down 74, S&P down minor. The NASDAQ, though, is kind of the story of the day. 8th straight day of it being up, close to record highs. The S&P's at record high as well, so or close to it. The Dow's a little bit off of that. The futures this morning indicated that we'd see a weak opening, so we could see a little bit come out of the Dow again. But the Dow, or excuse me, the NASDAQ has really kind of been impressive. And there's that old saying, sell in May and go away. That's the summer investment strategy. Would not have worked well this year because, and most years, but this year in particular, where we've seen at least the S&P with a broader index and the NASDAQ both continue to do very well during the summer. So interesting to see how we play out the rest of the year. But for now, the summer has been a decent summer.
All right. And what was it that influenced the market?
Well, right now, as you know from the headlines, the tug of war has kind of been between the trade war with China, the talk of that, and earnings seasons, because earnings continue to do very well. We're seeing numbers of companies report their best earnings surprises since it's the best we've seen since 2009. So we've got good company earnings versus potential trade war versus some economic news that internationally that may play a part in it. So that's really what we've seen that's been the most influence.
And is there a threat of a trade war playing into the market?
Well, there is, but at the same time, it appears as though it's being discounted a little bit both by the U.S. and China. The Chinese stock market sold off pretty dramatically at the initial onset of the talk. It's worked its way back up, so they're seeing some confidence there. Of course, our markets reacted initially, but we've come right back. So although that's always a potential threat, I think maybe a bigger threat might be the international, China included, as well as the emerging markets. Their economies are a little bit more fragile. If they begin to see some weakness, then that could create a little bit of a headwind for us because of the fact that it is an international world. So I think economic activity is a bigger threat than a potential trade war with China at this point. At least that's what the market's saying. All
right, Todd. Well, thank you so much for being here with us this morning. You have a great weekend.
Thank you.
And we'll be back after this break.